Hello students, in present video I am going to explain about 11th problem from depreciation topic. I am taking this question from Punkaj publications book. Let us see the question first. Mr. Srinu purchased a machine on 1st January 2007 for 5 lakh rupees and paid freight and insurance 50,000 and incurred installation charges 50,000 rupees. He purchased another machine on 1st July 2007 for 2 lakh rupees. On 1st July 2009, he sold half of the first machine for 1,90,000 and purchased another machine for 1 lakh rupees. Depreciation is provided by him at the rate of 25% per annum on straight line method. Assuming that the books are closed every year on 31st December, prepare machinery account for the years 2007 to 2011. This is the question. Let us see the solution for this. Machine account. Date particulars amount, date particulars amount. First what happened? Mr. Srinu purchased a machine on 1st January 2007 for 5 lakh rupees, paid freight and insurance 50,000 and incurred installation charges 50,000 rupees. Then in the same year 2007, he purchased another machine on 1st July 2007 for 2 lakh rupees. Continuation is for 2009 year. And at the end he is giving that assuming that the books are closed every year on 31st December. So December is the year last date. Means starting date is 1st January. So first year starts with 1st January 2007 and ends with 31st December 2007. In this first year, two assets they purchased. No? First asset they purchased for 5 lakh rupees and the second asset they purchased for 2 lakh rupees. These two purchase details we have to mention in first year. When asset is purchased, on debit side we have to show that. So purchase date 1st January 2007. For purchases you have to write two bank account. They purchased the asset for 5 lakh rupees and on the same date they paid some expenses on this first asset 50,000 plus 50,000. So for these two expenses debit side write down two bank account. In inner column, two amounts total. In outer column, 1 lakh rupees. Then, in the same year, they purchased another asset also. On 1st July 2007, second machine is purchased for 2 lakh rupees. Show that details also. Now, December 31st, 2007, year end. On that day, depreciation we have to calculate. Because these two assets we use now. So, first asset, cost is 5 lakh rupee plus expenses 1 lakh, total 6 lakh rupee. On that at the rate of 25%. And they purchased this asset on 1st January. Means full year they used. Therefore months are not required. So first year depreciation on first asset is 1,50,000. Second asset cost is 2 lakh rupee. For second asset also depreciation rate is same 25% into they purchased on 1st July no. So July first means July also they used for July, August, September, October, November, December. So total 6 months. Therefore into 6 by 12. 6 months depreciation is 25,000. Two depreciation totals in outer column 1,75,000. Then on the same day by balance carried down. Debit total minus credit amount. Debit total is 8 lakh rupee. Minus credit amount 1,75,000 is equal to 6,25,000. So first year is completed. Two sides highest total 8 lakh 8 lakh. Come to second year. This date next date on debit side we should write 1st January 2008. Bring this balance carried down amount on debit side. For that write down two balance brought down 6,25,000. And in 2008 year there is no additional purchase, there is no sale. So at the end of second year, that is on 31st December 2008, again we have to provide depreciation. Now on this date, two assets we have now. First asset 6 lakh worth asset we used for full year. Second asset 2 lakh worth asset also in second year we used for full year. Therefore on these two assets at the rate of 25% per annum for 1 year you have to provide the depreciation. First asset 1 year depreciation already we have calculated in previous year 1,50,000. So no need to show the calculation again. same 1,50,000 here. And the second asset, cost is 2 lakh rupee. On that 25% for 1 year is 50,000. Two depreciation amounts total in outer column 2 lakh rupees. Then on the same day, buy balance carried down. Debit total 6,25,000 minus credit amount 2 lakh is equal 4,25,000. Two sides highest total. Then come to third year. So this balance carried down amount bring on debit side. This date, next date, 1st January 2009. This amount 4,25,000 debit side. And in 2009 year what happened? On 1st July 2009, he sold half of the first machine for 1,90,000. First machine 5 lakh rupee plus expenditure 1 lakh, total 6 lakh no? In 6 lakh worth asset, half is sold. They sold this half asset on 1st July 2009. So credit side write down the date. For purchases debit side bank we are writing. For sales credit side you have to write by bank. So by bank account. In question is giving that they sold this first asset for 1,90,000. Write down that amount. And up to this date, we use this half asset now. Total asset value 6 lakh. In that a half asset is sold on 1st July 9. So this is a half asset, nothing but 3 lakh worth asset. From 1st January 2007 to 1st July 2009 we have. And in 2009 year, from when to when we use this half asset? From 1st January 2009 to 30 June 2009. Because on 1st July only they sold. So in July only 1 day we used. For 1 day we need not to calculate depreciation. So calculate the depreciation up to 30 June 2009. Not on full asset. Full asset value 6 lakh. In that half only they sold now. Therefore half asset depreciation only we need. So 6 lakh rupee into 1 by 2, 3 lakh will come. On this 3 lakh at the rate of 25% per annum for how many months? 1st January to 30 June, 6 months, 6 by 12. So depreciation on this half asset is 37,500. In this sale, we may get profit or loss. That also we have to calculate in working notes. Profit or loss in sale of machine. First cost. Total asset cost is 6 lakh. In that half asset only we sold now. Therefore, only half asset cost you have to show. 6 lakh into 1 by 2, 3 lakh rupees. And minus total depreciation. See, in 2007, on total 6 lakh worth asset, depreciation is available here, 1,50,000. In this half only we should take. Similarly, 2008, in this total asset, 6 lakh worth asset, depreciation is 1,50,000. In 2008, on total asset, 6 lakh worth asset, depreciation is 1,50,000. In this half only we need. And the third year, there is a half asset depreciation separately we have calculated, 37,500. This also we should take. So in 2007 half depreciation, 2008 half depreciation, 2009 this 37,500. These three we have to take here. 2007 on 6 lakh worth asset, total depreciation is 1,50,000. In that half into 1 by 2 is equal to 75,000. In 2008 also same. Total asset 6 lakh worth asset depreciation 1,50,000. In that half 75,000. 2009 half asset depreciation separately we have calculated now 37,500. Take that. Three amounts total in outer column 1,87,500. So half asset total depreciation is 1,87,500. Now cost minus total depreciation is equal to 1,12,500. So this is a half asset book value is 1,12,500. Book value means the value of the asset on sale date. So 1,12,500 worth asset is sold for 1,90,000. So we sold for more amount. So there is a profit in sale. Therefore, first to show this sale value 1,90,000 minus book value 1,12,500. Profit is equal to 77,500. This profit in asset account you have to show. If loss comes, credit side we should show. Profit, debit side. Now profit came now, debit side. When profit comes, when we sell on that day only. Therefore, for this profit also, sale date only we should write, 1st July 2009. This profit we have to transfer to profit and loss account. Therefore, in particulars column, write down the account name. To profit and loss account, 77,500. So, sold asset information we have shown. Now come to remaining assets. First asset, total value is 6 lakh now. In that half is sold. So, remaining half is with us only. And second asset, 2 lakh worth asset is also with us only. So, on these two assets, on 31st December 2009, we have to provide depreciation. First asset, 6 lakh is the total value. In that half, 3 lakh rupee on the 25% for full year. Because another half asset is not sold now, means full year we used. Therefore, into 12 by 12 will be there. No need to write that. So, 75,000. Second asset. Second asset is used for 1 year now. 1 year depreciation already we have calculated here. In 2007 year, in inner column it is available. Second asset depreciation is 50,000. That amount. And in 2009 year, they purchased another asset also. So, debit side, when they purchased on 1st July 2009 only, write down the date to bank account. Third asset cost is 1 lakh rupee. That asset also we have. From when to when? From 1st July to 31st December. Total 6 months. So on 1 lakh rupee at the rate of 25% per annum for 6 months, depreciation is 12,500. So 3 assets, total depreciation in outer column 1,37,500. Now debit total 6,02,500 minus credit amounts 1,90,000. 37,500 and 1,37,500 is equal 2,37,500. So 2009 completed. Then next date, 1st January 2010. Bring this balance here. To balance brought down 2,37,500. In 2010 year, there is no extra purchase, there is no sale. So on 31st December 2010 year end, provide depreciation by depreciation account. On that day, we have 3 assets now. First asset, half we have. Second asset, 2 lakh worth asset we have. Third asset, 1 lakh worth asset also we have. These 3 assets are used from 1st January to 31st December, full year. Therefore, months are not required while calculating depreciation. On these 3 assets, at the rate of 25%, these are the depreciations. Total in outer column. Then debit total 2,37,500 minus credit amount 1,50,000 is equal 87,500. For that last date of the year by balance carried down. Two side highest total, debit total. Up to 2011 he is asking. So for one more year we have to show this. Credit side balance carried down amount, bring on debit side 87,500. To balance brought down. Next date to this date, 1st January 2011. In 2011 year, there is no sale, there is no purchase. But you have to observe one important point. That is, observe this first machine. Remaining part is half now. That half part, what happened to this, clearly we will see. We purchased this first machine on 1st January 2007 now. So this unsold part is then a half part. That depreciation clearly if you observe, that a half unsold machinery cost is 3 lakh rupees. And in this 2007 year, on this a half machine, depreciation 75,000. So at the end of 2007, remaining machine is 2,25,000. So on 1st January 2008, the value of first asset unsold part is 2,25,000. And in second year also, on this unsold part, depreciation is 75,000. So at the end of second year, remaining value is 2,25,000 minus 75,000 is equal to 1,50,000. Then same value we have on 1st January 2009. For 2009 year, on this half a machine, depreciation is 75,000. So at the end of 2009 year, remaining value of the asset is 1,50,000 minus 75,000 is equal to 75,000. Then 1st January 2010, value of this unsold machinery is 75,000. And in 2010, depreciation on this half part is 75,000. So 75,000 minus 75,000 becomes 0. Means what? At the end of 31st/12/2010, this first asset unsold part 3 lakh is totally depreciated. So in 2011, first asset unsold part half part is not there. Therefore, while calculating depreciation on this first asset unsold part 3 lakh in 2011, we should not calculate depreciation. In previous problems, we never used to do like this, because in previous problems, rate of depreciation used to be given as 10%, 15%, like that. But in this problem, rate of depreciation is 25%. Means within 4 years, we are going to totally depreciate the asset now. So first year 25%, second year another 25%, total 50%, third year 25%, means total 75%, fourth year it becomes 100%. So within 4 years we are going to depreciate the total asset. When total asset is depreciated, after that there is no depreciation calculation now. So up to 2010 only, this is first asset unsold part half part is totally depreciated, because 2007, 2008, 2009, 2010 already 4 years completed. In 2011 year, first asset is not there. That is why even though it is not sold, we should not show depreciation in 2011. So you will get a doubt. In 2011 year, on this unsold part of the machine, half machine, why we are not calculated depreciation? It in question he is not giving that it is sold. Even the why depreciation is not calculated, because up to 2010 only that first asset remaining part 3 lakh worth part unsold part is totally depreciated. So in 2011 year that part is not there with us. Therefore no need to calculate depreciation. Come to second asset. For second machine also you have to observe like this. Second machine when we bought 1st July 2007 for 2 lakh rupees. So in 2007 year, from 1st July 7 to 31st December 7, half year we used. Half year depreciation is how much? 25,000. Then remaining value at the year end is 2 lakh minus 25,000, 1,75,000. Next year starting date 1st January 8, we have 1,75,000 worth asset. In 2008 year, full year we use this asset now. So full year depreciation is 50,000. Then 1,75,000 minus 50,000. At the year end, remaining value of the asset is 1,25,000. That value we have on 1st January 9. In 9 year also, depreciation for full year 50,000, same. Then 1,25,000 minus 50,000, 75,000 is a value on 31st December 9. Now next year, 1st January 10, value is 75,000. This 10 year depreciation, same 50,000. Now on 31st December 10, remaining asset value 75,000 minus 50,000 is equal to 25,000. Now for last year 2011 year, on 1st January 11, 25,000 worth asset is there. 1 year depreciation is 50,000, but only 25,000 is the remaining asset value. Therefore 50,000 depreciation we cannot provide now. When 25,000 worth asset we have, when we used it, how much will be depreciated? How much will be decreased? 25,000 only, not 50,000. Therefore in 2011 year, up to 30 June 2011 only we can provide depreciation on this second asset, because 6 months depreciation, for 1 year depreciation 50,000, 6 months depreciation will be 25,000. So 25,000 depreciation only we can provide in 2011. In that case, we can provide depreciation up to 30 June 2011 only now. Because if you want to provide depreciation up to 31st December 2011, then full year depreciation 50,000 we have to provide. But our asset value is 25,000 only in 2011. How can you provide 50,000 depreciation? That is why, even though it is not given in the question that they sold this second asset on 30 June 11, we have to provide depreciation on this second asset in 2011 up to 30 June 11 only. See, by 30 June 11, second machine is totally depreciated. On 31st December 2011, only third machine is left. So second asset is also we don't have on 31st December 2011. That is why in question, even though he is not giving that this second asset is sold in 2011 credit side up to 30 June 2011 only we have calculated depreciation on second machine. So second machine cost is 2 lakh on the 25% for how many years? From 1st January to 30 June, 6 months, 25,000. With this, second asset is also totally depreciated. Now come to 2011 year last date. On this date, now which asset we have? Only this third asset. Third asset we purchased on 1st July 2009 now. So in 2009, half year we used. In 2010, 1 year. In 2011, 1 year. So by 31st December 2011, it will be used only for 2.5 years. If you use for 4 years, then only asset will be totally depreciated. Therefore, third asset is not yet depreciated totally. So we can provide depreciation on this third asset on 31st December 11. On that day, by depreciation account, third asset, full year depreciation on third asset already we have calculated here now in 2010, 25,000. Show the same value here. Then finally, debit total 87,500 minus credit amounts 25,000 is equal 37,500. For that, last date of the year 31st December 11 by balance carried out. Two sides, highest total 87,500, 87,500. 37,500 balance is there now. This balance amount belongs to only third machine because first two are already totally depreciated before 31st December 11 only. Now up to 2011 he asked. Therefore, we have to stop the problem. But bring this balance to next year. Date is 1st January 2012. Two balance brought down this amount 37,500 on debit side. So this is the end of present problem. Take a screenshot of all these calculations. First page, second page. This is working notes. Only this profit or loss calculation you have to show in the examination. So these calculations, these analysis are not required. So this is the end of present video. Hope this video is helpful to you. Thank you.